Boom!
There it is.
All right, ladies and gents, that credit score, it could be the difference between getting the financing you're looking for and not. That's what the conversation of today's show is, and we're ready to rock some dreams for you, little Van Halen. Let's get this show rocking and rolling. Let's do this thing.
Shut up and sit down.
The Business Bros Podcast was created for you. Learn from the business professionals who come to share their stories. Find out what's working in business, on social media, what's hot and what's not, straight from the mouths of successful entrepreneurs out there doing the real work. And now, welcome to another episode of
Business
Bros.
Yeah!
I love it.
Damn, hit it, baby. Drop.
Let's do it all right, all you business pros out there. Before we jump into the show, just a quick reminder to please subscribe on whichever platform it is that you're listening to us on today. Give us a like, give us a follow, subscribe and drop a review. Help other like-minded business owners find value from our awesome guests while we rise up in those podcast rankings. We'll sincerely appreciate every single one of you for it. And if you want to be a guest on the show, we'd love to have you on, learn from you as well. Go to www.businessbros.biz, schedule your time, and don't forget to follow us on all our social medias at Business Bros Pod. All right, everybody, we're so excited and honored to bring another incredible guest to the Business Bros Pod. Today's guest is more than just your average lender. He is a lender with a heart, and he's on a mission to make an exceptional impact and improve the lives of home buyers who are buried in debt and feel like there's no way out. Our guest wants to make dreams come true, and he knows that for credit challenge buyers, those with student loan issues, and folks who either need to establish or perhaps reestablish their credit, buying a house feels far beyond their reach. But our guest knows how to make magic happen by aggressively challenging outdated and incorrect credit report information and optimizing the 5 areas of the Fico Algorithm to work in your favor. You can get your credit back on track and be ready to be a homeowner in record time. Tune in today to see how our guest can help you restore your credit and put you on the path to home ownership. Joining us today from a visit here in San Diego, but based out of Rockwall, Texas, the mortgage credit pro himself. Welcome to the show, Wendell Cox.
Woo! Let's do this thing. Wendell, welcome to the program, man.
What's going on, guys? It's so great to be with y'all.
Yeah, that's the kind of energy we're talking about.
That's what I'm talking about.
Yeah. All right,
Yeah,
Wendell,
man.
let's do this thing. Hey, man,
All right,
real quick
man.
question. What time do you get up in the morning normally?
6:30 in the morning. So
Okay.
really early. Yeah.
All right. Everybody's got their early riser. So my
That's
question
right.
to you is pretty simple because every entrepreneur goes through this type of thing, right?
Mm-hmm.
It is for you, 6:30 in the morning, the alarm goes off. You have the opportunity to do one of two things. You can hit the snooze button, stay nice, comfortable in your bed, or you can get your ass up and get to work. I'm assuming you're the type of person who gets his ass up and goes to
Yeah.
work. Why do you get up? What is that reason that fuels you to keep going?
Man, I love helping people. And that's really the goal of what I do. I've always been somebody that's always helping people. I started out in the funeral business before I went into the mortgage business. So I'd like to tell people I went from one mort to the other mort. So so it's always I've always been in a helping profession. So that's just kind of how it happens. And so that's what I love to do every day is get up and help people improve their lives. Credit restoration is that. It really takes people from, where you have high bills and have high expenses to a place where you have lower bills and lower expenses by improving your credit. It really does. So.
All right, dude, from the morgue to mortgages. I love that. The root word, ladies and gents, in mortgage, by the way, is mortgage, which if you expand out the meaning of the word mortgage, it is a contract until life. Now, granted, first of all, just so you guys know, in the state of California, we actually don't have any mortgages. Mortgages is like slang in financial terms because we don't actually do that. We have grant deeds and we have promissory notes, right? They're a little bit different, but the word and the idea, the concept is the same. So tell me, like in your own words, like what is it that you do exactly for people? How do you help them achieve that American dream?
So I'm a professional credit restoration company. That's all we do is we just focus on credit, getting that up. But I used to be a licensed loan officer, and so when I'm helping people, I have two hats on. I have the credit restoration hat on, and I have the mortgage lender hat on because I know the guidelines and I know what it's going to take to get there. The typical credit repair company says, "Oh, we just focus on your negative items," but we do a complete credit profile change that gets them to where they need to be. And so I can take any, from a low 500s up to a 620, which is typically what it takes to get qualified for a home loan.
Let's talk a little bit about that credit report and what it means. I talk to a lot of different people when they're in the position to buy a home. And the first thing we always talk about is let's sit down with a lender and let's see exactly where you're at, right? You have to figure out what your starting point is, because oftentimes there are a lot of people out there who are interested in buying a home or interested in getting some financing for whatever it is they're going to go through. And they jump to the conclusion that they have shitty credit. Like, that's like the first thing they do. Right. Oh no, I would love to buy a house, but my credit's bad. They've never even done anything. They have some idea, some concept about some credit card that they had when they were 18 that they forgot to make a payment on, or maybe it was something bad where they had a vehicle that got repossessed. That was 10 years ago or whatever it is. Why is it important that when we begin the buying process that we start with a lender, that we start with pulling that credit report?
Well, because you know exactly where you stand. And so, as a lender, and I'm sure as a realtor, you've heard, well, your credit is, it's a 540, but Credit Karma said it's 620. So, Credit Karma is not a real score. And so checking with a lender, it lets you know kind of where you stand, because the mortgage score is the most scrutinized score, and therefore it's going to be a lower score than what your bank tells you. A lot of banks will give you a free credit FICO score, they say, but it's a FICO 8. And most people don't know that there's 65 different credit scores that FICO has. And so the one that's looked at that's looked at the hardest is the mortgage score, because they're trying to make a decision of lending you in California $400, $500 up to $1 million over 30 years. And so, there's a lot more risk than, say, buying a car for $35,000 over a 5-year period.
65 different types of credit reports. All right,
credit
scores. Okay, so 65 different types of credit scores. So you're going to have to narrow this down for our audience, because I know that there are the three major ones. Anytime I've financed a house, whether I purchase my own, an investment property, whatever it is, I always get a report back from when they pull my credit, and it'll have the three agencies. Can you explain what those three agencies are primary ones that we should be looking after, and what is a credit report?
So the three agencies are Experian, TransUnion, and Equifax. Those are the credit bureaus, but they're not like a government agency like the Federal Bureau of Investigation. They are literally just data gathering companies that are global, and they make money off of gathering your data and reporting it through the Fico algorithm to generate a score. And so FICO is a company called Fair Isaac Corporation, and they created the mathematical formula that calculates your credit score. And FICO can only determine to a 98% accuracy how you're going to pay your bills over the next 2 years. That's all it does. It says, Hernandez is going to be able to just pay his bills, over 2 years, and we can predict it with 98% accuracy. And so the mathematical formula changes for auto loans, for mortgages, for insurance. A lot of people don't know that your insurance has a credit score tied to it. And so if you have better credit, you're going to get better rates on insurance. And if you have better credit, you're obviously going to get better rates on the home loan. And so the credit report is generated based on the different mathematical formulas that TransUnion, Equifax, and Experian use to generate a particular type of credit report, whether it's for a car loan, a home loan, even a credit card, and even your employer uses credit scores to determine if you're a viable candidate or not, based on the type of employment that you're getting.
So let's talk about that. Let's talk about the when it's used, right? So you've mentioned, we've already talked a little bit about mortgages when it comes to borrowing money to buy a home. We've talked a little bit about home or car loans when it talks about borrowing money to get a car. So just so we're absolutely clear, the only reason you need a credit score is in the event of you borrowing money. Is that sound about right?
That is 100% correct. Borrowing money and then the employer using it to determine if you're going to be a viable candidate. The military uses it too. The government uses it too. It just depends what function you're going for that a credit score is used.
I love to equate your credit score to your report card in school because I think there's a lot of similarities and really essentially this is the type of thing that happens later down the road. So let's picture yourself in high school for a second. You were either one of two types of students. You're the type of student who got the work done and got a decent grade in class or better, or you were the type of person who didn't get the work done and didn't get a good grade in class. When I, as a teacher, would pull up a student's previous report cards and I would see C's, D's, and F's across the board, I could make an assumption with 98% accuracy that chances are when I assign something in class, you are not going to do it, or you are going to do it based on the history of what you've done in the past. And I use this analogy to help people understand that that's essentially what a credit report is doing, right? If you can help me with that, Wendell, it is your adult report card. It's telling other people who you are giving, who are going to essentially give you money with 98% accuracy, whether or not, based on the history that you have with your finances, whether you're a good risk to lend this money to. And it's not that they aren't going to lend it to you. They just might charge a little more. Sound about right?
Right, exactly. So you're absolutely right. You get charged more based on where your credit score stands. You know, anything above a 620 or 640, you're going to be doing okay interest rate wise on anything, cars or homes. But so what it is basically think of if you have a 560 credit score, let's say, that is 56% chance that you're not going to pay your bills on time. So it is an adult,
report card.
An adult report card, because if you have a 560, you're 56% chance not to pay your bills on time. If you have a 720, you're 72% chance that you are going to pay your bills on time. So just, it really indicates where you stand.
Now, it doesn't tell you if you're a good or a bad person, right?
No,
let's get this clear, because a lot of people you're like, oh, you got a low credit score. Oh, you don't want to talk to that guy. No, man, it doesn't work like that. Okay. So first of all, the credit score and what Wendell does is kind of like that teacher at school that's going to come sit down with you and help you raise your grade. So you can easily come in with D's and F's into my class. We can sit down, have a conversation. We point out one or two things that you need to fix on your daily routines or what you're doing. And boom, your scores in class could come up. Wendell,
that's right.
Can you be my tutor when it comes to my credit score? What can you do to raise that, man?
Yeah. So there's several things that we look at. We don't just focus on the collections and the negative items. That is a part of it. We do help remove those, and we help remove bankruptcies and any judgments and things like that that are negative blemishes on the report. But we also focus on the positive side, and so we find that clients get results when they focus on the positive and the negative. So the Fico algorithm has 5 parts that you talked about in the intro. One of them is called credit mix, and it says to have 3 to 4 revolving credit cards. Those are revolving accounts. Those are accounts that go up and down every month. And it says to only have 1 installment loan. So those are fixed payment loans, like a car loan, a student loan, even the loans that you pay every month on because you got a lump sum, lent to you. FICO doesn't place a lot of importance on those. It places more importance on the credit cards because the credit cards show how you're going to pay. And again, it's an adult report card. And so with balances going up and down every month, it shows how you're going to manage those. So 20% of your score is maintained in those 3 to 4 credit cards by adding new credit onto your report. So we always show clients which cards to open to get that 3 to 4 card volume based on what they have already. The other one is to pay your bills on time, which is known as use of credit. And so you only want to use about 10% of your credit limit. So if you have a $1,000 credit card, you only want to use about $100 of that $1,000 every month, and you will see a significant improvement in your credit. There's a myth out there that says, hey, pay your credit cards down to 30% and you will see an increase. Yes, you may see a small increase, but the highest increase comes when you pay your balances down to below 10%. So like a 9%, $90 on a $1,000 credit limit card, and you're going to have more points added.
Let's hover there for a second. That 10 to 30% limit. So the example that you were using is $1,000 credit limit on a credit card. You're saying as long as I may maintain my balance at about $100, in other words, I owe them $100 at the end of the month, then that's cool. This is different from usage through the month, right? So let's say that my credit line is $1,000. I used $1,000, but I paid back $900 at the end. My ending balance is $100. Is that where we're talking about for the use of credit to maintain
Correct.
the limit at the end of the billing cycle at 10%?
Correct. For an easy example, that exactly right. Another thing too is if you can pay some of that $900 15 days into, on day 15, that helps because that records as a payment. And then if you pay 3 days before your due date to get to that $100 balance, then you're going to be golden. So, and if you have 2 or 3 months of doing that, you're going to see your score go up.
All right, so we're at credit mix, couple different credit cards, making sure that you're responsible, making your payments on time. You said one installment loan. We talked a little bit about the use of credit. So we're at a 10% limit that we want to have on those credit cards. What else?
So 35% of your score is in payment history, and that's where the collections lie, but it also records how you pay your bills. So if you pay your bills on time and we can get, if you have late payments, we can help get those removed. If those come off, then 35% of your score is impacted. So by paying your bills on time and us going in and removing collections, that impacts 35% of your score. And then the remainder of 15 is called length of credit. So if you have credit cards for 3, 4, or 5 years, that helps improve your credit as well. So that's when somebody adds you on as an authorized user to their credit card, you will see your credit score increase because, again, you're tapping into that length of credit. You want to be an authorized user on somebody's card that they've had open for longer than 5 years and that they pay their bills on time and they keep their balance low to have that authorized user card impact your score in a positive way.
All right, you mentioned clearing things off your credit report. So right. First of all, let's start off with what things show up on my credit report, and then we talk about, and then if you can go into how do you get them off.
Okay, so late payments show up on there, collections that are credit cards that you don't pay and go into collection, those show up, judgment, bankruptcies, just a number of things that can show up there negatively. Credit cards that you had that get charged off, those show up on there as well. So, and the way that we remove them is by going after the Consumer Protection laws, the Fair Credit Reporting Act, and the Fair Debt Collection Practices Act. They have strategies in there that we use to help show the errors of the credit report and get the items removed. So we use the laws in the customer's favor.
Let me give you a scenario here because this happens quite a bit. My mother's name is Noemi, Noemi. My uncle's name is Noe, Noe. So the Noe is on both of their names. They have the same last name as I do. Oftentimes things show up on her credit report that are his, things show up on his credit report that are hers, or worst case, I'm the third, which means my dad and my grandpa both had my name. And I know I do this to them on social media. You Google my name and it's all me. None of it's really my dad or my grandpa for sure. But on the flip side, I'll have stuff on my credit report. Sometimes I go to pull, we'll go to do a flip hard money loan or whatever it is. We'll pull a credit report and there is a revolving credit that is, I know, not mine, but it has my name on it. It's probably my dad's, or my mom comes up with stuff. How do I get those to come off? Sometimes they take a while. What's the time frame to do that?
We go after personal information on everything that we do. Every single time we're going after personal information. In this case particularly, we have a special form that gets notarized that says this is my name, this is how it's spelled, this is my date of birth, this is my social, this is my address. Remove all other information from my credit report that doesn't match this, and it's notarized and everything. So it's official, and that gets the results that we do. I have a customer that it's him and two brothers, and they're all named Jose Perez. I kid you not. And
it's a Mexican thing, bro.
It is.
Jose Mario.
So no, it is. I mean, the guy, the middle brother, his name is Leonard, and Leopold and Luis. And so Leopold's house is on Leonard, and Luis's car is on Leonard's as well. So it's a mess, man. It is a mess. So,
but the clearing up, I mean, and this is it's funny, we laugh, but at the same time, sometimes those people that are on your report are not helping you out. It could have been a collection, it could have been a bankruptcy, it could have been a number of different things that get stuck on your credit report, and we have to, you're talking about submitting a form and getting it cleared off, and yes, those things do get cleared up, but how long does it take? Like, if I'm planning to buy a house next month, and I have to remove stuff like that, I should really have a time frame in mind of how long this credit repair should
on
take.
On average, if when clients implement our plan of action, it typically takes 4 to 6 months. I've had customers be ready in 3 months, 4 months, 5 months. It just depends. It just everybody's situation is different. The amount of negative items comes into play as well. How old the negative items are, that helps get things removed sooner, because as a collection is older, it gets passed on from one collection agency to the next collection agency, and that weakens the impact of it. And so it's able to get stuff off that's older and been passed down from one to the next.
Oh, the healing power of time, my friend. All right.
That's
So
right.
if stuff's sitting on my credit report for a long time, it's easier to get off and clean it up for future use. And that totally makes sense, because think about that in real life, right? In real life, the mistakes I made as a teenager when it comes to my own personal finances, I probably overdrafted on like going to 7-Eleven and getting beer or something like that, right? Or maxing out a credit card on a vacation or something ridiculous like that that you've done as a youth. But over time, you've gotten better. You pay all your bills on time, and stuff like that doesn't happen anymore. So not being judged on the sins of your youth are definitely a good thing. I mean, imagine trying to go and apply for a job and then showing them your high school transcript. It's probably not going to be a good thing. So you update your resume with the most current events. Right. All right. So
it's that adult report card you're talking about, So to make sure, but things, again, a lot of times bad things happen that are out of our control, but sometimes it's just that adult report card that comes in that took months and years to get to the point where you are, and it's going to take a couple of months to get you out, and a process to get you out so that you're back on solid footing and can hopefully change your habits a little bit and move forward.
All right. Well, what about those people who are in this situation where, I'm describing, and being funny about it and saying, I used my credit card, maxed it out for a vacation. Well, maybe my youth isn't so far back, right? Maybe that kind of mistake was something that I was doing last year or the year before. And I'm ready to make changes. I'm ready to restructure the way I'm doing my life. I've been getting myself in order. And I come to you to start to repair my credit. But maybe I'm having a hard time, paying all my bills and getting situated. What are some things that I can do with credit companies or different types of lenders to help kind of restructure myself and get myself in a situation where I can get these things under control and help restore my credit along the way?
Yeah, I mean, it's all a conversation. It's approaching them, not admitting to anything, but just saying, hey, I see this on my report. It's affecting me. What can we do to help get this taken care of? And so it really is just talking to them. COVID came with a lot of things that you can do. So the CARES Act has some provisions in it that if you approach your creditors during COVID, they will help make, not impact your credit score, but also do some things to help, whether it's a payment plan or restructuring your loan, to make it so that you can make those payments and it not impact your credit. So it's really just, calling them, talking to them, and making arrangements with them ahead of time, and not just ignoring the problem.
Wait, Wendell. You mean that number on the back of my card? I can pick it up and talk to somebody and
That's
ask
right.
them things. I can adjust.
That's
like,
right.
dude, I remember when somebody explained that to me and they were like, you can ask for a lower interest rate. And I was like,
That's
what?
right.
What? You can ask to get that late penalty removed, right? And I was like, what?
That's right.
What they don't tell you is you can hear no as well, but there's chances and there's times where you can hear yes. And I do this, with, it took a while. DirecTV is one of those companies that I love to hate, right? I hate them. I have this love-hate relationship with them mainly because of the NFL Sunday Ticket. What's the most irritating thing about them is I can't get the NFL Red Zone without having the Sunday Ticket. I have to have both, right? And when I was trying to cancel my Sunday Ticket, they're like, oh, I'm sorry, the season already started. We can't cancel it. And then when the season ends, they're like, oh, I'm sorry, we can't cancel it. You got to wait till you make it so freaking difficult to do stuff, right? Credit card companies aren't necessarily the same. They tend to be very receptive if you call them and ask them stuff versus completely ignoring them. Can you give me some stories, some experiences on what we can do with credit card companies when we call them?
Yeah, I mean, again, if you talk to the person initially, sometimes it requires escalating to a supervisor. Ignore when they say, oh, well, the supervisor's going to tell you the same thing. No, I want to talk to the supervisor, and just kind of explain your case. I did get, I had a customer who had a one late payment on his Capital One auto because in Texas we had an ice storm. I don't know, y'all don't have those out here, but he had an ice storm came through and he wasn't able to complete a job to get paid on time, and so he was late on the car payment. So I was able to email the CEO of Capital One Auto to get this removed, and within 30 days he got it off and was able to do his mortgage and get into his home. And so it really is just having the tools and knowing who to contact to get the action needed that you can. And so it's just, like I said, calling them, talking to somebody higher up, and just working out a plan to go forward that gets the debt covered and not into late payments. Because if you get a late payment, it drops your score 50 to 60 points immediately, and you don't want to do that.
Oh, dude, those 50, 60 points.
I'm sorry, I want to jump in here. Did you say you got in touch with the CEO of Capital One?
Yeah. So
holy crap!
That's
how many people will go to bat for you like that?
He didn't respond to me. I have his email, and he did get it, and he did get the removal off, but it was a one-way conversation, but it worked. So
hey, Wendell, man, that's a squeaky ass tire right there, bro. Like if you knew where to talk, like that's the key, right? You've been in this business for a long time now, so the little things like that, being able to reach out to the person who is going to make a difference. Because let's face it, the CEO does not want to deal with some individual claim or call or late payment. They don't want to deal with that shit. They're going to send it to somebody to solve the problem. And the person who received it from a boss. So they're going to get the problem solved as fast as possible. Dude, that's impressive.
That's right. So that's why you push up to a higher level and don't just deal with the initial person. And so that's what I did. And I'm sure he just sent it off to a minion and they got it done. We did have the customer call in. He did talk to somebody and they did find the communication. So they got it off.
That's it. That's what it takes. Wendell, that's rock star status. That's the type of service that we love. We're all about being of service to others. So before we head out, if people want to work with you, they're struggling with their credit, they're getting ready to buy something, whatever it is, they need to get the ball rolling at the very beginning. They don't know where to start. How can they get a hold of you to work with you?
So go to mortgagecreditpro.com. There's a free consultation tab that they can click on, put in their information. We will review their credit report with them at no charge. We will send them a link where they can access it. It doesn't create a hard pull on their credit, but it's a way to review all three credit bureaus completely and at no charge. So, and then once we reviewed it, if they want to move forward with services, we can, but no charge to at least review your credit report, and you can do it online at mortgagecreditpro.com.
Marie says, what do these services cost? Also, what if the item on your report are not errors, but bad habits you're trying to change?
So services are $249 the first month, and then it goes down to $149 each month after that. the items on the report are not errors but bad habits we're trying to change. So again, we show you what levels to bring your debt down to, which is that 10% mark. We also have a money manager in our monitoring software that shows you how to pay your bills and organize them. And so we have some tools that we do to help you with financial. You had the Dave Ramsey lady on, not to knock Dave Ramsey, but he's not on board with credit cards, but he does have some good pay your bills strategies, and so I'm good with him on that. But he owns a mortgage company, and so he is encouraging people to get into their home loan. But the only way that FICO works is by doing what it says, which is having those credit cards open. And I'm not saying max out your credit cards. I'm saying have them on your report because they impact your score. Use them very little and just let them sit. Pay a bill. One strategy that I say is put your bill on auto pay where it pays the minimum, and that gives you flexibility to pay more if you can in the month. If not, then you have the minimum payment being paid automatically for you, and that way you don't have any more late payments. The other strategy is and so do that. Schedule your payments so you don't have any more late payments, and that's one way to correct errors of bad habits.
Yeah, Marie, and we talked a little bit earlier on the show about time, right? Time is one of those things that's going to heal all wounds. You hear that? Well, it's going to heal the ones the same in the finance stage. If you are in a situation where you're ready to make those changes, start making those changes and make those habit changes immediately. Some of those things on your report, because they're just habitually what you've already done in your past, are only going to be healed with time. But if you're going from this point forward and you're making all your payments on time, you set up your automatic payments, you set up everything so that it's situated so you're not making any more mistakes in the future. You're working your way through a lot of that debt consultation. You're working through minimizing those balances. You're working through all those things. And by the time you're ready in a position to move forward, you've already cleared off the stuff that's errors and you've made changes on your mistakes. It's like going to school, right? You can't just improve your grade overnight. You actually have to kind of do the work and get yourself caught up. And then over time, that GPA is going to improve, but it's going to take that effort, over a period of time. Was that wrong page, Wendell?
Yeah, for sure. And so again, it's if you have that one late payment, it's just calling them back, catching the balance up, and saying, "Hey, can you give me a courtesy removal of that late payment to get that off?" And again, it's like schedule those payments. It gives you breathing room to make additional payments if you can, and if you can't, then it's okay. At least your minimum payment's made, and you will have that payment history catch back up as you keep making those payments on time.
Awesome. All right, Marie, thank you very much. Here's another one. Awesome tips. Business bros always have the topics I need when I need them. Woo-hoo! All right. Glad it helped. All right, Wendell, last question for you, man. We're big on video testimonials. We love to have them, love to use them. They're the greatest way for you to attract new clients and just show off what you're doing. So what was your experience like on the Business Bros podcast?
Man, it's awesome, man, because you guys bring the energy. I wanted to bring the energy too with you, and we just had a fun time, going back and forth on stuff, and I know that it's going to give the exposure that my business needs, and look forward to bringing some value to you guys since we're in similar financial businesses, so wanted to help out both ways. So.
Sweet, my brother. Well, yeah, thank you very much for coming on the show. Credit, ladies and gents. We mentioned Dave Ramsey, and the thing about Dave Ramsey is he's not about using credit. He wants you to control your income. He wants you to zero out any debts. Now, what did we say at the beginning? The only reason you need credit is if you're going to borrow money, and chances are when you get ready to buy your house or your car, you don't have that cash. So you're going to need to finance that purchase. So that's when your adult report card comes into play, which is your credit report. And if you are struggling, you don't know what's behind it, you don't know how to read it, you probably need to improve it, that's when you want to reach out to people like Wendell to help you get that stuff squared away. So make sure you guys visit his website, book an appointment, just have a conversation, learn a little something you can take away from that conversation. A bunch of information, put yourself in a position where you can succeed. The website is mortgagecreditpro.com. That's mortgagecreditpro.com. And Wendell will love to speak to you, have a consultation about your credit report, and put you in a position where you're ready to buy. Especially if you're here in San Diego, ladies and gents, then you can hit me up. All right, ladies and gents, we'll see you guys next time. Again, Wendell, thanks a lot for coming on the show.
Thanks, guys.
Hey, man,
James, love being with y'all.
Thanks, man. Hey, real quick before you go, I know I told you off air, but I got to tell everybody, for those of you who are coming to San Diego or like Wendell's visiting, if you come to San Diego, you cannot leave without having a carne asada burrito, or sorry, California burrito, or carne asada fries. One of those two. If you're in San Diego, you got to have. It's like a San Diego staple. All right,
man.
So make sure you enjoy. All right, my brother. Enjoy the rest of your day. Peace out, y'all. We got a show at 4:00. We'll see you guys then. Later.
Thank you for listening to the Business Bros Podcast. Are you looking to get more clients or to increase your income? Hernan, the business bro, can help you generate referrals through the power of podcasting. And James, the insurance bro with Pipeline Insurance, can help you effectively add insurance to your existing business. If you are ready to create wealth today and generational wealth for tomorrow, email businessbros@csfirst.com to schedule a free consultation, or join the Business Bros Network, www.businessbros.biz.